Welcome to Amberger's Smackdown. I'm J. Christoph Amberger. For the first 6 months of 2007, our compliance editors confirm that we have done quite all right in regard to returns on our closed TFN portfolio positions. So far, 75% of all our closed-out positions have been winners, beating the old broker adage that 2 out of 3 ain't bad. Brokers, however, who coined that expression, imply that they're happy when they and the market maker are making money. We don't care about brokers and market makers. We prefer that our subscribers are those making profits. Our closed positions for the year through June 30th have average gains of 49%, beating even the record Dow by a handsome margin. Not to mention the year-to-date gains on gold, oil, and select other commodities our friends of the perma-bearish persuasion like to build their reputations on. While we don't bother with math games like annualizing these gains, I'd like to point out in all modesty that the cumulative gains on each single position would amount to 1,325%. Of course, the global equities markets have made it look easy to generate profits this year, if you dare taking them, that is. Oil, gas, and gold may still be trading near the much-touted record highs, but their performance year to date has vastly underperformed the stock markets. The Dow has risen over 30% in the past year, as have most European and Asian markets. Year-over-year gains on oil and gold, however, barely nick the double digits. A leading indicator of any economic boom is rising business development and investment, just as every recession has been ushered in by a softening in business spending. Business drives the economy, even though select presidential candidates of a certain persuasion still think business ought to be the government's private ATM to finance social engineering and politicians' re-election projects. Other leading indicators are economic growth, 3.4% for the second quarter, or unemployment, currently below 4.5%. And of course, plummeting new government debt due to increasing tax collections despite lower tax rates. Still, the cacophony of bearish predictions and dyspeptic outlook in the U.S. economy continues despite all evidence to the contrary. Even I, with my pronounced bullish outlook for both the American economy and U.S. and global stocks, occasionally have difficulties not listening to the twilight chorus of doomsday croakers. Returning to civilization after 1 week of Boy Scout camp accordingly was not without its own set of fears. Spending your days without access to newspapers, radio, and internet sure can set you on edge. And if you work in the investment newsletter industry, you start wondering what might be happening out in the world as you try to make sure your boys not only carry a water bottle on their 5-mile hike, but have it filled as well. Did the U.S. economy enter the often promised epic decline while you were teaching the lone non-swimmer of the troop the side stroke? Did the market sell off as you were trying to jam a leatherwork needle with much frayed twine through the holes of a boy-decorated knife pouch due by 9 a.m. the next morning? Did the real estate market crash and burn as you were trying to plant 522 rifle bullets into a circle that would be covered if you put a quarter coin on it? The trek home was refreshingly reassuring. The market had broken through 14,000, just as I had predicted a few weeks ago. 2 houses down the road have sold notwithstanding the subprime market shakeout. The U.S. economy was chugging along at peak levels, thank you very much. And the tree frogs and prophets were still croaking. And liberal politicians still promising to redistribute the Bush administration's economic boom into oblivion starting 2009. As I write, despite volatility, the market is gearing up for another push past 14,000. My prediction, and you can quote me on that, prepare for a Dow at or above 15,000 by the end of the year. For TFNFinancialNews.com, I'm J. Christoph Amberger.